Over to you, Charlotte.
Excellent. Thanks so much, Nicole. And I think the lobby is going off at the moment. So thank you to everyone who has joined us this morning. And kia ora, and happy International Women's Day. So I'm going to start with a karakia. Te tawa mai e runga, te tawa mai e raro. Te toe mai e roto, kia tau ai, te Māori tū, te Māori ora, ki te katoa, hu mei e hui e taiki e. So thank you again for joining WSP, the Curve, Dignity and the Diversity Agenda. You're in great company today. We've got an action-packed lineup, so this will hopefully be the best lunch break you've had all week. So I'm Charlotte Downs. I'm the Program Director at the Diversity Agenda and the Diversity Agenda Accord, and our goal is to help engineering and architecture firms become more diverse and inclusive through awareness, empowerment and action. And speaking of empowerment, I wanted to start with a personal story of something that happened to me last week when I was working from the gym. Now, I should tell you, the disclaimer is I don't go to the gym. I was working from the gym cafe. That's the joys of being a remote worker. But the only thing with working from the gym, you do need to wear active wear. I had my laptop out and I was having one of those mornings where you're on a roll and you're getting stuff done. The only downside of working from the cafe at the gym is there are lots of toddlers running around, and sometimes you get that mum guilt that you're not there taking your kids swimming, but you're on your laptop working while they're in daycare. And I couldn't help overhear one of the mums sitting behind me navigating the world of the terrible twos. Mr. Two was not in a good mood. His hot chocolate was too hot. His hot chocolate was too hot, and so his mum coached him, asking how he would get to cool it off. So he decided to go up to the kitchen with his mum. They walked together so he could get some cold milk. Mr. Two didn't understand why his food was taking so long, but his mum showed him where the kitchen was and how long the queue was. And when his scone arrived, his mum helped him butter the scone, but he protested. He didn't like butter, but actually it turned out he only wanted to hold the knife. And his mum calmly diffused the situation. He ate, he drank, and he was quiet while I continued to send my emails minding my own business. And then a short while later, I heard his mum say to him, I know, do you know what happened to you? Do you know what was happening? You have been hangry. That's what you were. Do you know what hangry is? She explained hangry, grabbed his cheeks and said, now my happy little boy is back. They stood up and walked past me, and it was at that moment I knew I should get up and tell this superwoman that she's a great mum. But the only problem was I wasn't feeling very sociable. You know, when you're not in the mood to have those conversations with strangers, and I was engrossed in my emails and feeling a little bit flat. And as they walked past me out of eyeshot, I just started to feel that regret. So I stood up, and to my surprise, she hadn't made it out the door. I was relieved. So I stopped. I saw that she'd stopped to chat to another customer. So I stood up and I thought, I'll pop to the loo, my excuse. I walked past her and my adrenaline was pumping. And I said, I was just popping to the toilet, and I had to say, I think you're an amazing mum. It can be a real thankless job, but I just wanted you to know that when I saw you in action back there, you're so calm, you're a coach, you've got the patience of a saint. I learned so much from you, and I hope to be a mum as good as you. And she looked at me and she started to cry. And she said, it can be so hard. Thank you. And then my eyes started to water, and we both looked at each other and we knew that this was a real special moment that would change the way both of our days were panning out. And it did. I had so much more energy. I had given someone credit where it was due, and often that credit is long overdue. So I just ask you all sitting out there, this International Women's Day and forever going forward, you never know what someone is going through behind closed doors. And so, you know, let's give credit where it's due and tell those superheroes they're doing a great job. And that doesn't just go for parents, that goes for anyone that's out there battling different situations. And I think we can fairly say that there are lots of big challenges that we need to tackle. Gender pay, the gender pay gap, pay equity, the underrepresentation of women in leadership roles. the underrepresentation of ethnic minorities in our industries. And so whilst there are some really, really big issues we need to tackle, sometimes it's about those everyday little connections and conversations that will really help shift the dial for us and help us create that sort of wide cultural systemic change that we need. And so, you know, in terms of cultural shifts, there are lots of organisations out there doing some amazing things. And so now I'd love to hand over to Rebecca Tjaberings, who is going to talk about what WSP are doing to tackle DEI within their workplaces. Over to you, Rebecca.
Thanks, Charlotte. Tēnā koutou katoa, ko Scarfo Pike te wanga, ko Goita awa, ko Quinlan me Tjaberings nā iwi, te tamaki makaru te kianga noho, ko WSP aho, e mahi ana, he director pā aho, ko Rebecca aho. Nō reira, tēnā koutou katoa. So yeah, I'd just like to introduce myself. I'm Rebecca Tjaberings. I'm the Director of Power and Energy here at WSP. The reason I'm part of this call because I'm also the New Zealand leadership sponsor for our Diversity and Inclusivity Advisory Group. I also have to say I'm a mum of 3 children. My children are age 4, 6 and 9. So when I just listened to what Charlotte was saying about that story and how she said thanks to that mum, that she's doing a great job, that kind of actually made me well up a little bit as well, just hearing that. So yeah, my life is busy, doing a full-on job looking after my kids. But yeah, so that's me. I'm really excited to be here on International Women's Day together as an industry. So it's not just WSP, we've got our Diversity Accord signatories here. And I wanted to have this important conversation on equity, and specifically today, we're focused on women's financial well-being and independence. When Charlotte asked if we wanted to do something together with a diversity agenda, we jumped at the opportunity. I think we all know that women are underrepresented in our industry. There are still gender pay gaps, and we are losing some great women at key points of their lives. So to come together as an industry and support that change, that's always something we're always going to jump at. We're pleased to have such a great lineup of women here today. And so one of those being the Curve, who will talk to you next about how we can get a bit more investment savvy and focus on our finances. Something probably not women could do with. I'm sure it applies to everyone, and I know it's something I'm very keen to learn about. And then we have Dignity here to talk to us about equitable workplaces. So very excited to have both Victoria and Lisa here with us. So before we hear from them, I just wanted to talk briefly about what our role is in this space. When I say our, I don't just mean WSP. I mean all the businesses in our industry, and particularly because this is focused around the Diversity Accord, those people in the Diversity Accord. So I feel we have a role in that space, and that role is really to support our females to maximise their earning potential. So we can do that by making our environment more inclusive, really supporting progression, and continually looking to ways we can make our businesses great places to work at. So I thought I'd use this opportunity to share some key focus areas that WSP have been working on as a way of just sharing and providing inspiration to others, really. So the first thing, probably the biggest area, is removing the barriers, is what I'll call it. As an industry, we find that there's challenges around, so I'm just going to clear my throat a sec. Yeah, there's challenges around retaining female professionals as they progress through life, particularly around their mid-career when they maybe start to have families, or they have parents getting older and need more care, or they just want to achieve that better work-life balance. So at that point, they choose to leave the industry and stay at home for longer periods, or take on what they consider to be less stressful and often less well-paid roles. So I guess we're trying to grapple with the question, how do we remove the barriers to make it easier for women to stay in this profession if they choose to? So what we've done at WSP, we've implemented flexible and hybrid work policies. That means the working hours can be adjusted and working from home is supported. This means it's easier, for example, for women to work around family obligations, or reduce the pressure of commuting, and making that work-life balance just that bit more achievable. And that's something in my role at WSP, and with the 3 children under 10, I could definitely not succeed without. So really great things. We've also introduced unspecified sick leave. So that's the leave we take when we have dependents that require us to look after them due to illness. And the number of days for that is unspecified. So we've got the flexibility to use it when needed. And lastly, we've focused on the parental leave policies. I think Victoria might mention this later on, but we've really focused on those parental leave policies to provide longer term parental pay and allow the benefits such as leave balance to be accrued during the time away, and remuneration reviews to take place. So when women actually come back to work after their parental leave, they're not financially disadvantaged or feel like they've gone backwards in their career, and they're able to use accrued leave to take on part-time options to ease back into working. So those are the things we're sort of doing around removing the barriers. While there'll always be a choice for women to leave the industry, I think the steps we're making are trying to make it easier for women to continue to thrive in that profession. The next area is creating the right environment. So overall, I'd say the industry has moved a long way from the kind of blokey past, if I put it that way. So females can now start to see role models ahead of them, and they're not always the only ones in the room. And we continue to focus on that environment every day, but there's still a lot more to be done. The main thing we've been doing in that area is putting a focus on listening to and hearing from the women of our business. So whether that's through focus groups, surveys, exit interviews, or data, I guess the women knows best. Women know best about what their challenges are and what their ambitions are. So we've tried to provide safe spaces to be able to hear from our women. One example of that, we've got a thing called the Women of WSP Network, which is actually a Teams-based network, but we can chat on that and talk about different topics, support each other. We have some webinars through that network, and it's just a really safe space for women to raise things and support one another. Cool. The last thing was monitoring and measuring change. So as a founding member of the Diversity Accord, we've quite quickly put a huge focus on closing that pay equity gap. So that basically means the pay equity gap means both men and women are paid the same for the same role. So when we looked at that, we had to put an in-depth analysis into the roles and pay and how pay differs across genders, and we had those payouts to kind of make everything fair. So that was quite easy to close, but well, I say easy. The people who did it wouldn't have found it easy. But since we've done that, the main thing we needed to do is continually monitor that. So every time we look at something where we're looking at pay, we need to continually put that gender lens on it, so that it's not just a one-time fix, it's a continual monitoring kind of process as we go forward. As you know, there still remains a gender pay gap. That's because, well, two factors. So you've got less women operating at senior levels of the business, and I suppose more women choosing careers which may not pay as well as others. So that's also a big focus, not quite as easy to fix, as it involves attracting more women into the industry and supporting them to progress into senior roles. The great news is we've got about 40 to 50% of our new graduates identifying as women, which means the pipeline of future leaders is looking good. Yeah. So just to wrap up, as a female leader in the business, I'm definitely appreciative of all the changes that have been made in our industry. It still doesn't always mean it's easy to have a successful career while juggling that family life. I know I have my ups and downs, but at least my choices are getting easier, and the support and focus on this can only keep making things better. And to conclude just by saying it's great to be part of the diversity agenda so that we can all work together to make change and we can learn from one another. So that is it from me, and I'm going to pass back to Charlotte just to introduce our next guest.
Thanks so much, Rebecca. And it's great to hear all the work that's happening within WSP, particularly around hearing the voices and ensuring that the voice of the people are at the forefront of everything that you're doing. It's easy to build a strategy and create a plan, but we've got to remember it's about the people. So without further ado, I'm going to introduce Victoria Harris. We're so pleased she was available to join us on probably a very popular day, and she's probably in demand on a day like today and probably every day. So Victoria is the co-founder of The Curve, an investment education platform for women. Victoria's got over a decade of experience in portfolio management and has held analyst roles at some of New Zealand's biggest finance companies. Even my partner Cam, I spoke to him about the curve and said he loves investments. I said, you might want to join. He's a financial analyst. He said, I already know the curve. So that gave me the credibility that we've got the right speaker today. But besides being the only woman in several boardrooms and forging a successful career in finance, Victoria is empowering women by providing a platform where women can learn about money in a non-scary environment with the curve. Great Instagram following. I'm just tagging that on the end, and I love listening to your podcast. So before I hand over to Victoria, what I will say is we are taking questions. So Victoria will take questions. So I think we've got quite an active group. So if you've got any questions, pop them in the chat. And if you really like a question, you can like that question, which will then bring your question sort of further to the top. And so Victoria will answer those and when the time is right. And something that I should mention is we're also recording this webinar for those that registered but can't make it. So just note that you're being recorded, and if anyone has any concerns, let us know. I'll hand over to Victoria. Thanks so much.
Great, thanks, Charlotte. I'm just going to share my screen and hopefully this works. Can you all see?
Yes,
you all
we
see
can
my
see that.
screen?
Thank you. Yes, perfect.
Yep.
Thank you.
Perfect. Yay. Gosh. So I want to start off by kind of telling you about my day so far. Well, my alarm went off this morning on my Apple iPhone. I then rolled over and I scrolled Instagram, which I know is terrible, bad morning habit. But then I got up and I brushed my teeth with my Colgate toothbrush. I burnt my toast accidentally with my Breville toaster. Then went for a walk in my Lululemon pants and my Kathmandu puffer. Grabbed a coffee on my way to work with my MasterCard. You can kind of see where this is going, and I could really go on forever. But what's my point? Well, my point is that every company that I've just mentioned is a publicly listed investable company. So without realizing it, we're actually using the products of so many publicly listed companies on a daily basis. And so you don't have to be an expert to kind of spot investing trends or investing opportunities. You know, they are very much all around us every day, and we use the products of these companies every day. As Charlotte mentioned, my name is Victoria Harris. I actually first got interested in investing when I was about 8 years old, and it was through my mother actually, and she bought me some Contact Energy shares. Now, I don't remember much, but one thing that I do remember is that I just used to receive these checks in the mail, and I used to just be sitting there and get money in the mail, and I thought, oh my gosh, this investing stuff is super easy. And I wasn't that wrong. That was a dividend check that I was receiving from Contact Energy, but it was kind of my first insight into, you know, what is this investing stuff, and, you know, how do I get, you know, money in the mail? And then throughout my school years, I had a really strong interest in businesses, how they worked, how they operated. I actually had a crack at some running my own businesses. One was selling goldfish to my friends. One was selling herbs from Mum's garden, which she wasn't too impressed about. Another one was selling quad bike alarms, which, you know, for being at an all-girls school was quite strange. And then even selling my own drawings, which at a young age was probably the least successful of the businesses that I tried my hand at. But I did try my hand a lot, and I had a real interest in businesses and how they operated. Now I get asked, you know, how did I get you know, into the finance career, and I wish I had a better story, but finance was literally a paper at university that I took during my commerce degree. I didn't know much about it, to be honest. We weren't taught about finance or investing really at school. And I thought, you know, hey, this looks kind of interesting. It's got some affiliation with businesses and with commerce. So I thought, you know, why not? And took that paper. Thank goodness I did, because, you know, fast forward 12 years later, I've had, you know, a fantastic and, you know, pretty dynamic and very fulfilling career in the finance industry. I've had the pleasure of working at some of New Zealand's top funds management companies and KiwiSaver providers, and I've worked in Auckland, London, Sydney, and I've managed to manage millions of dollars on behalf of clients. With that being said, we have to put this boring financial disclaimer in any presentation that we do. I am not a financial advisor, so just anything that is said in this presentation is very much just for educational purposes or information purposes, and shouldn't be considered advice. And if you do want advice, then you should speak to a financial advisor. But throughout my career, one of the most frustrating things that I saw pretty much throughout my entire kind of 13-year career was that I really saw women around me struggle with the confidence when it came to their finances. I constantly had friends coming up to me being like, "Hey Vic, can I sit down with you for just 5 minutes? I've got a bit of money. I just want to know what to do with it, or I know it shouldn't be in the bank and I know I can do more, but I just don't know anything to do with investing. It's so overwhelming." And I was more than happy to sit down with my friends and family members and talk to them about the investment world and in the finance world. But these kind of 5-minute coffees, they started taking up a bit of my time. And I remember a few years ago, something went off in my head and I thought, you know what, if there's this many females around my close circle of friends and community that are coming to me wanting to know the answers to these questions, there's a lot of other females out there that have no one to go to and no one to ask these questions to. And so there was really a place missing for these women to go to learn about investing. And so that was why we set up The Curve, which is an education platform where women can go to learn about finance and investing, with the key thing being that it's in a non-scary and non-intimidating way. So we really wanted to create a very inclusive platform for all women or anyone that identifies as a woman, or really we've opened it now to anyone who's been left out of the conversation when it comes to investing, because if anyone that wants to learn about money, it's their money, it's the money they want to make for the future they want to have, and we just want to help them get there. So we were really focused on making a safe space for women to get investment savvy without that noise and confusion, which is so prevalent in the finance industry. And the key thing is that women learn in a different way to men, and we wanted to create a place where that makes sense to them and their lifestyle. And we have a range of different products, like Charlotte mentioned, in terms of the podcast. We have online courses. We have all different ways of learning, because people learn in different ways. So we really have the aim at The Curve to close that investing knowledge gap. So we want to bring together those like-minded, smart women, but unique women, to kind of talk and learn amongst each other as well. And I really want, with my experience, to be able to share that and to create a place where women can become more confident when it comes to their finances. But I guess why is it so important, particularly for women, to kind of learn about investing, and why have we been left behind when it comes to these investing discussions? Well, historically, societal conditioning meant that women were less likely to be the breadwinners, or less likely to have an income of their own, and therefore we were left out of those conversations around money and finances and investing and how to grow our wealth. I remember a close friend of mine said, my dad used to discuss investing with my brothers, but because he thought I wasn't interested. And that's a really systemic issue that we're in, a narrative that we hear a lot, that we're trying to change. And fast forward to now, women are much more equal participants in the workforce, which means that we are more equal contributors to those household finances. But we still lack that education and knowledge around investing and really growing our wealth. We've spoken a bit before this afternoon already about the gender pay gap. We all know about the gender pay gap. We all know it's there, but there is an even bigger issue, in my opinion, and that's the investing knowledge gap. And the investing knowledge gap can have a huge impact on your wealth trajectory and the wealth trajectory of generations to come. And it pains me to say that women are actually much more likely to end up in financial hardship at retirement as a whole. 1/3 of women today have less than $5,000 in their KiwiSaver accounts, and just 4% have over $50,000, and that's compared to 13% of men that have over $50,000. There was some new research out as well that shows that women on average have 20% less than men in their KiwiSaver accounts across the spectrum, across the age spectrum. But that gap actually increases with age. So as women get into their 40s, that gap is 30%, and as women get into their 50s, that's 32%. So that gap widens as we get closer to retirement, which is not what we want to see. And why is this? Well, firstly, and again, we've spoken about this slightly already, is that women earn less than men on the whole. There was a 2021 report that showed the gender wage gap in New Zealand is at 9.1%. In Australia, it's actually 13%. So we're doing well with a terrible statistic. But and this was a slight improvement on the previous year. So even though we're at 9.1 now, that was an improvement on 9.5 last year. So we're slowly getting there. But the fact is that Kiwi women still earn about 10% less than men. So, or you could put it this way, that from about mid-November, we're working for free. So this lends itself to us contributing less to our KiwiSaver. So say you had John and Mary, and Mary's getting paid less than John, even though they're contributing that same percentage amount, say 3%, to their KiwiSaver from their salary. John's 3% is much higher than Mary's 3% in dollar terms. So if you earn less, the dollar amount that you're contributing to your KiwiSaver is less. The second point here is that we are much more likely to take time out of the workforce to have children or to look after family. And this usually means that we're not contributing at all to our savings or as much to our savings. So women work much more part-time roles than men as well. And this, again, is often because we tend to take more flexible or lower paying work options because we tend to be the ones that look after the children. So this does make it a bit more difficult for women to advance as well into those higher paying management and leadership roles, which does affect your earnings over your lifetime if you can't move into those higher paid management or leadership roles. The other thing is that when women have children, they experience this thing called the motherhood penalty. Now I don't want anyone who is about to have children or has children to take this in the wrong way. This is just statistics, but it is called the motherhood penalty, and what it shows is that when women have children, they do experience that their wages decrease by about 4 to 8%, and studies show that their earnings do not return to those pre-parenthood levels for about 10 years. Another way to look at it is to compare it to the salaries of men. And it just goes to show these two graphs here, the stark contrast between a woman's earning capacity and a men's earning capacity after they have children. And it's not sitting here in a kind of an I hate men club either. It's very much just showing the impact that having children has on a woman's earning capacity versus a male's. And when women take a break to have children, they tend to not keep up their KiwiSaver contributions, or they miss out on their employer contributions or their government contributions, which just kind of adds fuel to that fire and adds to that gap. This was actually really heightened during COVID as well. So the last 2 years, or the last the 2 years of COVID having an impact on women in the workforce much more than men, because they were taking those lower paid or part-time roles. So in 2020, in the June quarter, there was 11,000 people that lost their jobs, and 10,000 of those were women. So nearly 90% of those were women. And this is why it's really, really important that there are supportive parental leave policies for both parents. And it's essential in order to close that gender pay gap and ensure that women don't end up in financial hardship when they reach retirement. Women also live longer once we reach retirement. So we earn less, we take time out from contributing, and we actually live longer than men as well once we reach retirement. So on average, we live about 4 years longer in retirement than men. And so once we get to retirement, we have a smaller pool, and it actually has to go further. So, all these three factors, the earning less, taking time out from contributing, and living longer, all contribute to us having more likely to end up in financial hardship at retirement. Now, on that, there is a positive part to this talk, I promise. But this is all why it's really, really, really important to make the most of your KiwiSaver, and why, making sure you're in the right fund for the right amount of risk and the tenure that you have in your KiwiSaver, and making sure that you're with the right KiwiSaver provider. Now, one of the most common questions that we get asked at the Curve from women is, firstly, am I too old to start? And secondly is, have I missed the boat? Now, the answer is exactly the same for both of these questions. It's absolutely no. You can start investing at any age. You just need to adjust what you invest in. So if you're younger and you've got a longer time horizon, and when I say long time horizon, anything over five years or above 10 years. So that 5 to 10 years is considered, or even longer, is considered kind of a long-term time horizon. That means you can invest in more risky investments. And when we say risk, we mean more volatile. So you can invest in investments that move up and down a lot more, typically stocks, and therefore you end up getting a higher return usually if you take that higher risk. So if you're younger, you've got a longer time horizon, you can invest in more risky investments and therefore get a higher return on your investments. If you're older, you've got a shorter time horizon, you've probably got you should have your investments in a lower risk investments, or maybe a higher allocation to the likes of cash, for example, but it'll be slightly lower returning. Just because you've got that shorter time horizon, you don't have the time to weather that market volatility, whereas over the long term, that market volatility tends to smooth out. But money is powerful, and people like to sound like they know what they're talking about when it comes to money. They like to share all the good stories of things that they've invested in, and this definitely makes people feel like they've missed the boat. Trust me, you have not. Even if your Uber driver, your hairdresser, or your neighbor tells you of all the money that they've made, and it makes you think like you've missed out, you haven't. Trust me. There's over 20,000 publicly listed companies globally, and the great thing is that the stock market is always changing. So the missed opportunity here might create another opportunity here, or because share prices are constantly changing, there's always opportunities being created. So you have never missed the boat. We had a KiwiSaver event once, actually, last year, and a 90-year-old lady turned up to learn about KiwiSaver, and I didn't have the heart to tell her, but it just goes to show that even at 90, she was interested in learning about investing, and she just would adjust what she invested in because her time horizon was shorter, and she didn't have that, that 20, 30 year period. She would just adjust what she invested in. But another common question we get asked as well is, where do I start? Now, look around you is what I say to this. It's the answer to this question. I said in the opening that investing opportunities are all around us. You don't have to be an expert to spot them. I remember my first investing book I ever read, and I've read a lot of investing books now, but it was by a famed investor called Peter Lynch. And I remember it was my first day in my as a graduate. And my boss came over and he dumped it on my desk and he said, I don't want you to do anything today. In fact, I just want you to read this book. And I thought, wow, I didn't think this is what the finance industry was like. But I read that book, and he's a famed investor, and his fund has delivered nearly 30% return per year over the last 13 years. So he's consistently doubled what the US stock market in general has achieved, and he's considered to be the one of the best performing funds in the world. But anyway, so his book was about 30 years old, but there was one quote, and I read it probably 13, 14 years ago now, but there was one quote in there that really resonated with me, and it's something I still think about every day when I invest now, and it is, invest in what you know. So it means invest in what you use, invest in what you're passionate about, invest in what you like, invest in what you understand. If you're consuming a product from a company, you're already doing research on that company without even knowing it. If you are seeing your product fly off the shelves, be it shampoo or some type of alcohol or a biscuit or something, if you're seeing that product fly off the shelves and it's obviously in demand, that's an investing trend. And I sometimes find it hard to switch off. If I go into a clothing store, for example, and it's really busy and packed, I'm looking around going, is this an investable company? Because obviously a lot of people are loving their product. So if you're consuming a product from a company, you're doing your research of that company without even knowing it. So invest in what you know. And the great thing is that so many studies have been done that show when women do actually invest, we're actually better at it than men. Woohoo, which is great. But we just lack that confidence. So it's shown that women investors have consistently outperformed men. And why is that? Well, it's because we spend more time researching our investment choices and decisions. We do take a much more level-headed approach to investing. We have more of a kind of a buy and hold that investment mentality, rather than constantly trading or constantly having to change. So, when it comes down to it, we're much more likely to kind of play that long game rather than chasing those trends and constantly trading those shares, which can create fees and eat into the returns. So all of these things historically make for better investing outcomes, and is how the famed investors like Warren Buffett actually invest. I think for me, being in a kind of male-dominated industry, has been at times particularly challenging, especially when I was younger and it came to my self-confidence. I think in every single job that I've had, I've been the only female, or I've been the first female in my team. At meetings, I'm usually the only female there. And usually at dinner parties as well with friends, I'm the only female in the room with this kind of level of financial knowledge. And I really, really want to change that for women globally. And also one thing I've noticed over my career is that we bring a different set of skills. We can spot those trends and themes that men can't, and we have that more considered approach to investing. Every person has that level of uniqueness that they can bring to the table, whether it be your age, your ethnicity, your gender, your background. Bringing that view and that approach to investing, can make for great investing outcomes. You don't have to all look or be the same. And I remember this really resonated with me when I was a young analyst. And as an analyst, you have to pitch ideas to your investment team, an investment idea that you think is really good, that will eventually be bought and by with clients' money and benefit the client. And so I remember I was pitching the idea of investing in a jewelry retailer, and I had seen that this jewelry retailer, there was people flowing out of the stores constantly. The company was opening up more and more stores. They were popping up, and I could see all my friends were shopping there, and I could just see that there was such demand for their products, and I was convinced that this was converting into revenue and profits for the business, and it would be a great investment. But I was trying to pitch this idea to my male colleagues who are a bit older, and they couldn't quite comprehend the investment case of this idea. And there was a lot of debate, a lot of back and forth, and I held my ground, and eventually they invested in it. And it made the firm and the clients a lot of money. And I remember sitting there, it was a kind of an aha moment of, you know what? We don't have to all look or be the same to spot these trends and ideas. This was something that I could bring to the table because of my uniqueness that I saw with my own eyes happening in front of me. And so it really resonated that, you don't have to be super, super smart. You don't have to, sit down and study this stuff for days. It really is, investment ideas are really all around us. You just really need to open your eyes. And there's been tons of similar situations like this since now, and I've kind of realized that you don't have to be an expert at every sector either, or every company. I just really needed to know, and so should all of you, is what is your circle of competence. I'm not going to know if a drug or a biotech company is going to be successful. That's not my circle of competence. I'm not going to spend hours trying to understand some obscure technology of a company, of a tech company that I don't understand. I'm going to stick to what I know, and I'm going to stick to what my circle of competence is, and be an expert in that. So I really want to get you to ask yourself is, what is your circle of competence? What are you passionate about? What products do you use regularly? Are you really passionate about climate change, and therefore, any companies or industries that operate within that? What products are you really into? Skincare, or are you in a marketing role and at the forefront of new marketing software? There's so many different elements of your day and of your job where you can figure out, what is your circle of competence, and what are you interested in, so you don't have to try and be an expert at everything. It's so much better to know a few companies or industries well than a whole lot of stuff not well at all. And it comes back to that of investing in what you know. And the great thing is that with the emergence of like Sharesies and Hatch and Stake, that investing is finally becoming accessible to everyone. It's not just an elite group of people with money now that can learn to grow that money even more. Investing and growing your wealth, it can really be accessible to anyone. And if there was ever a time to be optimistic about the future, I think it's now. I think I see a future where investing is much more openly talked about by men and women, and that leads to children being more educated in schools and about spending and saving and investing. And I think this benefit would really, really flow down from generation to generation and effectively change the shape of society. I know and understand and have had the privilege of learning about the benefits of investing for so long, and how you know, when done correctly, it can really change lives, because money is powerful. And I'm really, really passionate about spreading this knowledge and, you know, improving this financial literacy. And I want to really educate women so that, you know, they feel empowered, and can see how empowering and rewarding and fun investing can be. It doesn't have to be boring. And I think really understanding, you know, how to grow our money can be so empowering. You know, not only does it improve your confidence, it leads to financial independence, it leads to flexibility, and it leads to choice. And it gives women control over their lives, and it gives them freedom, which is really, really important. But you know, women, we all need to be, you know, strong advocates of this, not only for ourselves, but for others as well. So we really want to educate everyone together and help everyone, you know, get on that wealth trajectory journey together, because we want to create, you know, a generation of women where you've got simple information that's flowing, you've got smart conversations that are being had, and that'll eventually lead to financial independence. And with that, I will open it up to questions.
Wonderful. Thanks, Victoria. Really interesting. We do have some in the Q&A. Would you like us to read them out, or would you like to? We've got some in the Q&A and some in the chat. I thought we might just start with go to the Q&A one first.
Okay.
And then we will go to the chat afterwards. Are you happy to read them out, or would you like us to read them?
Yes, it's just loading. Yes, yeah. So what would you suggest to someone who is younger, invested in high-risk areas and lost everything and now has to start again? Well, firstly, I'm sorry to hear that. It can be a real knock to your confidence when you lose everything, or you lose a lot of money when you're investing. There were a few things that I would say is that if you're investing in something that's high risk, whether it's cryptocurrency or, you know, the stock market can be high risk in itself. It all comes down to your time horizon. So if you've got anything over that 5 years, even 10 years is better, anything over 10 years, then you can take that high risk. And we say that because if you say you invested all your money into cryptocurrencies and you had a 1 year time horizon, then you would have been, you know, substantially hurt last year, because that balance would have been, you know, down about 60%. But if you were like, look, you know, I've got a 20-year time horizon, then eventually, particularly with the stock market does go up and to the right. It does go up over the long term. Now, if it's going down over the long term, we've got some serious issues with the global economy, and therefore your investments are probably the least of your worries, because there'd be something seriously wrong, seriously detrimental going on. But the other thing is that if you do have a shorter time horizon, you still can take some risk with your investments, but make sure it's not the whole thing. So you might want to put a smaller amount into crypto or into shares, but don't make it your whole portfolio if you are, you know, a bit risk averse, or you don't have that long time horizon. The other really key thing is diversification. That is so important when investing. And that just means not putting all your eggs in one basket. So not putting your entire life savings into the stock market, or into one company. You know, putting it into the likes of a fund, like an ETF, which is an exchange traded fund, which invests in, you know, sometimes hundreds of thousands of different companies at once. That gives you that diversification. So if one company does really badly, then you know you haven't lost everything, because you've got a whole lot of other companies that are probably going to do well. So it's all about diversification as well, is kind of spreading that risk and investing in maybe different assets, maybe a little bit in cash, a little bit in stock market, maybe some tiny bit in crypto as well if you were that way inclined. But diversification just means that you're less susceptible to something going wrong or making a bad decision. And trust me, I've made plenty. But that's why, when I invest with a portfolio approach of about 30 different companies, and even my personal investments, they're very much spread around in different assets and in different funds. So I do have that diversification, so I am limiting the risk of losing everything. Sorry, it's a bit of a long-winded answer. What are some public platforms we can use for investing? Good question. Sharesies is great. They have, you can invest in US, Australian and New Zealand shares, and as well as ETFs that I mentioned before. So they have, one of the biggest ranges of what you can invest in. There's also Hatch as well, which is US stocks. So there is a great range of platforms out there now. And yeah, like I said, the best thing is that you can invest with $1 on them. You don't have to save up, $10,000 to even start investing like you had to historically. So they've really, really done a great job of bringing investing to the masses. And we get a lot of questions on which is the best platform. To be honest, yes, they have increased their fees lately. But they are all much of a muchness. Some don't charge for, or some have lower charges for putting trades on, and others have charges for changing your currency, and others don't. So it's really much of a muchness, but it is one of the lowest ways one of the lowest fee ways of investing. Is through those platforms, if you were to wanting to do stock pick and pick stocks to invest in. What factors do I need to pay attention to in choosing KiwiSaver provider? Really good question. There is kind of probably three elements that I would say. The first one and the most important one is performance. Now, a lot of people probably think that the most important one is fees. I have to disagree. I think I would way rather be paying higher fees and getting higher performance than having my money in a low fee fund, because at the end of the day, it's the performance that grows my KiwiSaver. And yes, fees will eat into performance. So a great example is that if I was investing if I had my money with a KiwiSaver provider that had a 10% return, but I was being charged 2% fees, I would be making an 8% return. If I had my money with a fund that was delivering 5% return, but it was only charging me, a 0.5% fee, that's still 4.5% that I'm getting versus my 8%. So even though the fees in this one are a lot lower, the return after fees, so you're comparing apples with apples, is still higher in the higher fees KiwiSaver, if that's not too confusing. But it is really important to look at performance and look at long-term performance. Most of us in our KiwiSaver will have over 10 years until we need it. So therefore, if you can look at the most historical performance, whether it's 10 years, whether it's 15 years, if the KiwiSaver provider's only been around for 5 years, then look at that 5-year performance. But look at the most historical. It's very easy to do well or do badly in a short time frame. You might have a bad month, you might have a bad year, but to consistently deliver good performance over the long term, that shows a really, really good KiwiSaver provider. So if they're delivering, near 10% return or over the long term, that's great. So firstly, it would be performance. Secondly is fees. And make sure that you're looking at after fees performance. If you're sitting down and you're comparing two KiwiSaver providers, the rules are that they have to show after fees performance now. So it is a lot easier for the likes of us to compare apples with apples and compare that performance, but make sure you're looking at after fees performance, because that's effectively kind of what you get in your hand. And the other thing is the risk. So a lot of KiwiSaver providers, or the funds that you're choosing to invest in, will have a little risk metric, which just shows what the fund invests in. So if you're wanting to invest your money in shares, just make sure that the fund that you're investing in is actually invested in shares, and it's not in something that's a bit more low risk. But yeah, and there's a lot of great platforms out there actually that compare KiwiSaver providers. So there's ones like on Sorted. Sorted has a calculator. Better Saver also is another one where you can go in and compare KiwiSaver providers.
Victoria, I am conscious we've got loads of questions here, but we're running out of time, and so we'll have a chat to you afterwards about how we might respond back or package up with that.
Put an email and reply that way if that's easier. Yeah. Sorry.
Sounds no, it's a really great topic. I'm going to say thank you very much, Victoria. I'm just going to hand over to Charlotte now to introduce our next speaker.
Excellent. Thanks so much, Victoria. So many insights there, and the one that just keeps sort of, jumping in and out of my head is, when women invest, we're better at it than men. I mean, I loved that. I'm going to move over now to Lisa. So Lisa Maathuis at Dignity. Lisa is the general manager at Dignity, and for those that don't know Dignity, they are on a mission to create period equity in Aotearoa, but it goes beyond that, beyond period products. So I'm going to hand over to Lisa to share Dignity's journey and how we can get involved and get behind the amazing work they're doing. Over to you, Lisa.
Great, thank you. Hi everybody, so yeah, I'm General Manager at Dignity. I am also mum of a fairly giant and often hangry 2-year-old, and I have my first baby, Archie, who's a Border Collie, and my husband and I also have an architecture firm, so I know a little bit about the industry down here in Wellington as well. So that keeps us really busy. And today I am here to talk to you about periods, and I can see that there's over 99 participants dialed in, and I'm hoping that none of you jump off the call because you don't want to talk about this topic, so I'm watching that number. But talking about periods, menstruation, pads, tampons is something that still makes a lot of people feel really uncomfortable, get the ick, or just not want to talk about. And that's not your fault. The taboo is really deeply ingrained in all of us, and it shouldn't be, because 50% of us get periods for about 50% of our lives. And periods are in fact so significant that the survival of our human race depends on them. So really, I hope that you become more comfortable talking about this today with me, and I am going to chat with you about a couple of topics. So I'm just going to bring up my slide deck here. Great. Can you just let me know if you can see that okay?
Yes, we can see that. Thank you.
Thank you. So here at Dignity, our mission is delivering period equity. So what does that mean? Period equity means that nobody ever misses out on work or school or any other opportunities because they don't have access to period products. So we can break that down at Dignity into two very lofty goals. One is to end period poverty in Aotearoa, so that no one misses out on opportunities because of their period, and that 100% of workplaces in New Zealand are providing free period products. So these are fairly lofty goals that we are trying to achieve with our business, but they're actually directly linked to each other. And I'd like to talk more firstly about period poverty in New Zealand. It's something that I didn't realise how significant of an issue it was before I started working at Dignity. And I'm kind of embarrassed to say that, but that's honestly the truth. And it's not something that I've personally experienced. So I feel like for whatever reason, I was born into the privilege of never experiencing that. And now I'm very grateful to be in a position where we can have some impact and help to solve that problem for New Zealand. So period poverty in New Zealand, I just want to, just want to set the scene for you a little bit. There was some research done and 23% of people with periods have missed work or school at some point in their lives because they didn't have access to period products. So this stat really shook me when I started, and when I was walking down the street, I couldn't believe that almost 1 in 4 people with periods that I was walking past may have at some point in their life not been able to go to work or school because they didn't have access. Even worse is that 14% of girls in Decile 1 schools were missing school more than 1 day a month because they didn't have access to period products. So this is period poverty in general. Then when COVID came along, in the first quarter where COVID hit, 90%, so 10,000 out of the 11,000 jobs that were lost in New Zealand belonged to women. And we saw a demand increase for our products. So it's a really significant issue, and it's something that we all need to be aware of and tackle together. So when people don't have access to period products, it's not just not being able to afford them. The other things that it impacts is how people feel. People are embarrassed and they have reduced self-esteem. They end up using things that are ineffective and unhygienic. It further creates poverty and other social and gender issues. But the worst thing is that people literally miss out on education, work, sports and social activities because they have to stay at home because they can't go out because they don't have access to products. So in terms of what Dignity does, our business model works as a buy one, give one. So we work with corporates like ANZ, Sharesies, Xero, Silver Fern Farms, and we sell period products to them, and there's 10 boxes sold. 5 boxes go to their offices for their employees to use, and the other 5 boxes we gift to community organisations across New Zealand. And that helps us to play a big role in helping to reduce and eventually end period poverty in New Zealand. So a bit about our journey with our Give partners. We're really proud that we've gifted over 780,000 products since we started 6 years ago. And we've worked with over 230 Give partners. So this can be community organisations, youth groups, maraes, anybody that is supporting people who may be experiencing hardship can go to these places and get access to free period products. When Dignity was originally founded, we had a lot of schools who were Give partners because schoolgirls were a big part of the period poverty numbers and statistics, and we really wanted to support them. So we had a lot of schools. And then our co-founder Jacinta led the Positive Periods campaign, which you may have heard about. So that was really focused on getting the government to agree to provide free period products in schools. So that campaign went really well, and it did get pushed through government. So Ministry of Education started the rollout of free period products in schools in 2021. And that's great because that means that all the public secondary schools in New Zealand now have access to period products. But for us, there's still a huge gap. So we have 230 current partners, and we have a wait list of around 40 organisations who would still like to partner with us to receive period product, and that grows as more people hear about us. So we're obviously really driven, and the reason why we exist is to create social impact and to help to try and solve period poverty, which, as you can see, is a massive issue in New Zealand. And we can't do that without the workplaces that we work with. So we have over 100 corporate clients. But when you take the social impact out of it, actually just having period products in workplaces is something which is quite new. And I guess with workplaces like Victoria mentioned before, they have predominantly been men. So the workplaces that we often work in have been designed by men for men. And so the idea of creating more equitable workplaces means that we can bring period products into work to help people. And these stats can sort of set the scene in terms of people who get their periods at work. So the first one here is that 86% of menstruating people have been caught out by their period when they're not at home, and this is often while they're at work. Caught out does not mean you are experiencing period poverty and that you can't afford to buy period products. Caught out just means that your period came when you didn't know it was going to, or you didn't know, but you didn't take enough product to work. And I think that almost everybody who's had a period can agree that they've probably been in this situation at some point. Another pretty outstanding stat is 62% of people have left work immediately at some point after getting their period because they need to go and buy supplies. And that accounts for obviously lost hours of productive work. It's a stressful situation. And it's something that only people with periods have to deal with. And sometimes when I'm talking to people who don't get periods, when I first got this job, there was somebody and they congratulated me and said, it's great that you've got this job and congratulations. And it's great that you provide free period products to people who don't have access. But he's like, why would like ANZ and companies like that give free period products to their staff? Obviously, their staff make good enough wages that they can afford to buy them themselves. And so I said, yes, totally agree. But if we take that logic, then what that means for people who don't get periods is that you would have to, in the morning when you leave for work, take your own toilet paper to work, put it discreetly in your bag or at your desk. And when you need to go, you can put it discreetly in your hand and you can go to the bathroom, because when you get there, there's going to be no toilet paper. Now, this is something that as women and people with periods, we just deal with and we just accept that this is normal. And it shouldn't be. So period products should absolutely be provided like any other consumables that offices offer. So when we talk about creating more equitable workplaces, initiatives like providing free period products help to increase employee well-being. So we know that people get stressed if they get their period at work and they either have to have an awkward conversation with somebody or walk to the nearest dairy and not know what's going to happen on the way. So when you have things like this, we saw that 82% of people at Xero, for example, felt an increase in personal support through having period products in their workplace. It also supports diversity and inclusion. So what it shows is that your employer has an active interest in valuing women's health, but also going back to just recognizing that access to period products just should be a basic human right. And lastly, we know that 89% of employees want to work for companies that support wellbeing initiatives. So it's all very well that lots of companies have things like yoga days and ping pong tables and stuff like that, but actually there's something which impacts 50% of us, and that can be really easily solved by having these products in place. When we've implemented this, just some of my favorite things in terms of how people feel about this, because I know that it seems pretty basic just to put a box of tampons in the toilet, but some of these quotes are around how people feel when they've got this in place and it's been a few months and they've kind of had a chance to use it. So other than it being free, it's wonderful knowing that we are being acknowledged and respected. The next one here is it was nice that this was announced by a male staff member at the all-staff meeting, and that he used the correct terminology and didn't act like it was a secret or a shameful thing. And lastly, it's a nice touch in a very male-dominated environment. It shows that we're thinking of the ladies on site. That was for one of our clients in the construction industry who were putting it on their construction sites. So when you think about building equitable workplaces, this is something which might seem a pretty basic thing to do, but it can have a really big impact on how people feel in terms of feeling valued and respected and cared for. So with all of our partners, a couple of the reasons why they didn't just go to the supermarket and buy any brand, you know, what makes Dignity different and why have we been able to partner with some of New Zealand's biggest companies? It's really focused on the fact that our drivers are the social impact that we have by gifting the product. Sustainability is one of our key objectives. So we only use plastic-free, organic product. And that we're New Zealand female founded, so we're local as well. So that is a very quick, in my 15 minutes, summary of, you know, what period equity means, how much of a problem period poverty is, and that not many people know about it. So I at least hope that I've been able to educate some people today listening about the fact that that exists, and also about creating more equitable workplaces and how period products can have a really great impact on your employees. The last thing that I'd like to end with today is really around how you as an individual can contribute to creating period equity. Being International Women's Day, I know it's great to hear about all the awesome things that companies are doing and thinking about yourself and how you celebrate yourself, but period equity and period poverty is something that impacts a lot of women, and it's something that you can play an active role in. So there's three things. One is that you can drive change in your own workplace. Educating them on these stats and encouraging them to talk to their employers about having period products at work. The second thing is that through Dignity, you can do individual gifting. So that's on our website. If you did want to gift a menstrual cup to somebody, you can do that and give the gift of somebody not missing out on something because they have access. And the last one, I was thinking about WSP and the kind of company that you were. And actually, all of you more so have this great opportunity to lead with your clients. So specifically your architectural designers and your designers, you can ask your clients if they've considered things like incorporating period product dispensers in their bathroom designs, and you can have a direct impact on this. So I think I'm telling this to the right people, and the reason why, just to summarize here, is that the WSP website tells me that this kind of thing is in your DNA. You thrive on challenges and unconventional thinking, and you want to create progressive solutions and do purposeful work that shapes the future. So I hope that you'll all be bold, and I hope that you'll lead, and I hope that you'll join us in creating positive change to create period equity in Aotearoa. Thank you.
Amazing. Thanks so much, Lisa. And I can see the comments coming through saying how great that was, and I think it's fair to say that we're feeling quite full. There's a lot of information that has come through from, and we've covered such good ground from the terrible twos and showing thanks and how we connect with people and you know, make a difference in people's lives. You know, all the amazing work WSP are doing, and we can learn from a lot of that in terms of policy and but also creating that culture for everybody to thrive. Victoria's session around the investment ideas, they're all around us. So I'm going to see the world differently now. I've got my active wear on from the waist down. Just kidding. I did put some suit pants on today. We're going to start seeing these ideas around us, and it's about diversifying your portfolio and having period products in our organisations. It's not just about the products, it's about how we create that equity so we're not caught out at work, and that we can all create a more equitable Aotearoa. So if you want to follow the curve, you've got the curves details and podcast. We've got Lisa at Dignity, who would just be chomping at the bit to receive an email from you saying you want to jump on board and be a partner. As would I. The Diversity Agenda, it's free to become a Diversity Agenda member. We also have the Diversity Agenda Accord, where our members make that ultimate commitment to become signatories. So if anyone would like to talk to me about becoming a signatory, I would also love to hear from you. So I'm going to close us now with a closing practicing karakia. Kua motu e motu mahi mo tēnei wā, manakitanga mai mātou katoa, o mātou hoa, o mātou whānau, ai ki te orangi. And that is our work has finished for the time being. Protect us all, our friends, our family, and peace to the universe. Thank you all for joining us, and thank you to WSP for hosting and agreeing to let us partner on this amazing event. Have a great day, enjoy celebrating International Women's Day, and let's not make it a one-day event. And best of luck with everything that you go on to do from here. All the best.
Thanks so much, Charlotte.
Thank you.
Thank you.